So, good evening once again. Today we are going to focus one of the key area for financial reporting, and this area is likely to be tested. So, the topic that we are going to look at is interpretation and analysis of financial statements, and the area that we are going to consider under this topic is we look at the ratio, we look at the financial ratio, we look at the uses of financial ratio, and also limitation of what financial ratio. When we say ratio is a mathematical concept. Ratio is a what? Mathematical concept. This is a what? A mathematical concept. A mathematical concept. A mathematical concept. So when we say a mathematical concept, what that one implies is that it only shows the relationship. So ratio shows the relationship between two or more variables. It shows the relationship that exists between two or more variables. So ratio is an expression between two or more variables. So that's ratio. So ratio is a word, is a mathematical concept that shows the relationship that exists between two or more variables. That is ratio. But when we now talk about the financial ratio shows the relationship between two or more financial data in a financial statement. That's what I mean by financial ratio. Financial ratio show the relationship between two or more financial data in a word, in a financial statement. This may be expressed as a percentage or as a fraction of another figure. So that is financial ratio. Don't forget, we say ratio is a relationship. Ratio is a mathematical concept that shows the relationship that exists between two or more variables. But we now say financial ratio shows the relationship between two or more financial data in a financial statement. So it may be expressed as a percentage or as a fraction of another figure. Are you with me? Hello?
Yes, sir.
Hello, are we there?
Yes, sir.
Okay. Then, when we talk about the uses of financial ratio, the uses of what? Financial ratio is very straightforward, because when we say the uses of financial ratio, what we are saying is that the information need for accounting information users are not usually the same. Then when we now talk about where is the area, that is the various need for which accounting information analysis are needed. So that is where we come about what the uses of what financial ratio. What is the use? The uses of this financial ratio. So the only thing that you can use to analyze the uses of financial ratio is to put the acronyms of what is called Mr. what? Mr. PLP, Mr. PLP capital, Mr. PLP capital. So if probably in exam, the examiner is just telling you that maybe after giving you the data, the examiner is telling you to calculate the following ratios, and it is possible for the examiner to just tell you that give 3 or 5 uses of what? Financial ratio. There, if you remember Mr. PLP capital, you are good to go. Where M represents market valuation, where M represent what? Market valuation. Market valuation. So meaning the uses of financial ratio, one of it is what? Is for what? Is for market valuation. Such as when we say market valuation, example, such as EPS, any per share. That's the example of what? Market valuation. Are you with me?
Yeah.
Hello. And
Yes.
another example that we can see under the market valuation, it is a P/E, which is what? Price any, price any, price any ratio. And another thing that we can also see, it is called any yield, any yield, any yield. That's the example of what? Market valuation, any yield, any yield, any yield, any yield. So that is for M, market valuation. So one of the uses of what? Ratio and financial ratio or ratio analysis is what? It is market valuation. That is, it is used for market valuation. So the P, we said, R, we said Mr. Okay. The R is for the purpose of what? Risk analysis. 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 You say one of the uses of financial ratio is market valuation and also risk analysis. Then we look at the P, we are still going to Mr. PLP capital. So we look at the P. So that the first P here, it is called profitability performance. Profitability, profitability performance. Are we following?
Yes, sir.
Profitability performance. And L aspect of it, it is one of the uses is because of what? Liquidation. Liquidation. We say liquidity. Sorry. Liquidity. And the second P, one of the uses of it is what? Performance measure. Performance measure. Performance measure. Performance measure. Performance measure. That is performance measurement. Performance measure. So this one is Mr. PLP. Mr. PLP. So if you are still going further, we say Mr. PLP capital. So the C aspect of it is what? is used for what? Asset utilization. Asset. Sorry, I mean C, not A. C, what's it called? C is comparative. Yes, comparative analysis. Comparative comparative analysis. Comparative analysis. Comparative analysis. A aspect of it, it is what did I call it that time? Asset utilization. Asset utilization. Asset utilization. So we say capital, right? Capi. So after A, so the other P of it is the word for planning. Planning. And projection. You can use it to project. You can use it for planning and projection. Capi, that is I. Capi, okay. I. So the I aspect of it, it is called what? Investment. For investment. Are we following, please?
Yes, sir.
So investment. So capital. So followed by T. So the T aspect of it, it is called what's it called? Trend analysis. We are using it for trend analysis. Trend analysis. And what's it called? Capital. Okay. Capital. That is A. Another A is that we can say, we call it actual. You can use it to get your actual return. So the L that will make it a word, capital, we can use it for liquidation decision. I think we've talked about liquidation before, right? Okay, that one is liquidity. So we can say liquidation decision. So this is the uses of what? These are the uses of what? Ratio. Financial ratio. If you go by Mr. PLP Capital, you have the one of the uses is that it is used for market valuation, such as any per share, price, any ratio, and any yield. And it's also used for risk analysis. It's also used for what? Profitability performance. It's also used for liquidity. It's also used for performance measurement. Also used for comparative analysis, also used for asset utilization, also used for planning and projection, also used for investment, also used for trend analysis. You can use it for actual return, to calculate your actual return, and also liquidation decision. Are we there, please?
Yes, sir.
Are we all following? There's only one person that is answering, please.
Can hear you, sir. Very well, sir. Very well.
Okay, so after that, we can now move to, I said we are going to look at four things here. We've discussed about ratio, we've discussed about financial ratio, then we also discussed about the uses of this financial ratio. So let's now look at the limitation. What are the limitations of this ratio analysis? Limitation. of what? Ratio analysis. So this limitation of ratio analysis is something that you can also look at the what's it called? The acronyms to tackle it. So the acronym that we are using for this limitation of a ratio analysis is to say I am big sis. 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 So if you use I am big sis, then you are good to go to actually know your what? Your limitation of ratio analysis. So number one, we talk about I. I is that there is something called isolation. Isolation. So isolation is one of the what? The limitation of what? Ratio analysis. When we said isolation, what we are saying or what we are referring to isolation that will be what? One of the limitation of ratio analysis is that financial ratios are not really meaningful when used on isolation. So for ratio to have meaningful impact, do you understand now? So for a ratio to have a meaningful impact, it will need to be compared with what? With another ratio, or let's say an established threshold. You understand now? So if you want the ratio to have a meaningful impact, so because if you calculate ratio and you want that ratio to make sense, to have a meaningful impact, it is where you are doing a what? You are doing a comparison with another ratio. If you are doing a comparison with another ratio, it's just like let's assume your industry, the industry, the business that you are doing. Let's say the business is a hospitality business, or probably education sector, or probably medical. Then for you to calculate ratio and you want that ratio to have a meaningful impact, you have to compare your ratio with the industrial average. Hello, are you following? Hello.
Yes, sir.
We are
Hello.
following. We are following.
Yes, sir.
Okay. So for that ratio to be meaningful and have meaningful impact, it is when you are comparing it with another ratio. And that another ratio we are talking about, we are actually talking about the industry average, the industry, among the industry that you are operating. So you have to compare the ratio that you compute with the industry that you are currently in. Not only that, when we talk about the threshold is probably, maybe there's a set there's a set ratio, like, oh, the liquidity, let's assume the gross profit margin. Probably you have a threshold of, say, gross profit margin 25%, and you computed maybe your own computation fall within the ratio of maybe 22%. You are using that ratio to compare another ratio. So that's where we can now say that ratio, it is what? Meaningful impact. So, but when we talk about the limitation, one of the limitation is what? Isolation. That is, financial ratio are not really meaningful when used on isolation. So for a ratio to have meaningful impact, it will be what? Compare with another ratio or threshold. Is it clear?
Yes, sir.
Hello. Hello.
Aye.
Hello, sir.
We can hear you, sir.
Okay, one
Yes, sir.
person is the person want to ask question because I discovered that one person dropped something.
No, sir, it was a mistake, sir.
Okay, so and we said I am big C's. So a aspect of it is called accounting policy. Accounting policies. So why accounting policy is part of the limitation of what ratio analysis is that financial ratio may not adequately and what effectively measure the financial performance between two or more entities. So if the entity operates under different accounting policy, do you get it now? It will be difficult if the two what's it called? If the two entities operate under different accounting policy. So let's assume entity A operating one accounting policy and entity B also operating another set of accounting policy. So this will cause the limitation of what ratio analysis. That's why we say one of the limitation of the ratio analysis is what accounting policy. Number 3, it is what M for you to form IAM. M, it is called what manipulation of what financial statement. Manipulation. Manipulation. So of what are you manipulating? Manipulation of what? Financial statement. Statement in such a way that management may manipulate the financial statement so as to achieve their own desired objective. You know, some company management can decide that let us manipulate this financial statement so that they can achieve their own desired objective. That is, there's something called window dressing. They will just doctor the financial statement. Do you get my point now? So in order to achieve their own desired objective. So all this can cause a what limitation of what ratio analysis. Hello, are we there?
Yes, sir.
So big, I am B. So we are in B now. So B aspect of it is called business size. Business. The size of business can also determine business size. Business size. You understand? Because if you want to measure the ratio analysis between two entities, and you now discover that two entities are not of the same size, So as a result of that, what's it called? The financial performance between two or more entities. So if the entity are not of the same business size, do you get it now? So it may not adequately and effectively measure. So it won't be adequately effectively measure if the two companies that you are trying to measure, they are not of the same size. So all these can also cause the limitation of ratio analysis. 5, which is we are still in big. Okay, I. So the second I here is called what? Inflation. Inflation is also one of the causes. So let's move on. And what is it called? Big. That is BIG, right? So G can also cause it. And what we are talking about the G is that generally accepted formula. Generally what? Accepted formula. Generally accepted what? Formula. Generally accepted formula. Generally accepted formula. So there's no standard. When we say generally accepted formula, so there's no standard and the general acceptable single formula for the what's it called expression of some key ratios. So when we say expression of some key ratio, such as what's it called, return on capital employed, profit margin, etc. So there's no what acceptable and generally what generally generally an acceptable formula for this. So this can also cause the what limitation of ratio analysis. 7. Are we there? Hello? Hello?
Yes, sir.
Hello?
Yes, sir.
Yes, my dear.
Are we there?
Yes,
Yes.
sir.
Okay. S aspect of it, we call it what? Suitable threshold. Suitable threshold. Suitable threshold. Number 8. And what's it called? Another I, we said iambic C's. So another I, it is called what's it called? Inadequate. Yes, inadequate. Inadequate. Adequate information. Inadequate information. Inadequate information. Inadequate information. And also number 9, which is the last S, is talk about skill requirement. Skill requirement. Skill requirement. Skill requirement. Skill requirement. So all these are what are limitation of what of ratio analysis. Ratio analysis. Ratio analysis. So then let us now move to the application. How are we going to apply them? So by applying the ratio analysis, is just for you to know how the ratio can be what's it called? Classification of what? Ratio analysis. How are we going to classify them? Classification of what? Ratio analysis. How are we going to classify them? So when we say classification, it is now when we classify them uh, according to uses. So if you classify them according to uses, then that is where we can now start how we are going to do what? Apply them in what? In a financial statement. So classification of what? Of ratio. Classification of ratio. So we are going to finish this tonight and start the working as well, so that we can close this topic once and for all. We don't have much to talk about here on this topic, just that when we apply the formula, and sometimes we should know what they are, what the question is actually asking us to do. So number 1 of the classification of ratio, we call it what? Profitability ratio. Profitability ratio. Profitability ratio. 2, We talk about the liquidity, liquidity ratio, and 3, we talk about the efficiency, ratio, or because there's another name for that, efficiency ratio, or we call it activity ratio. Activity ratio. Number 4, we talk about the what's it called? Long-term solvency. Long-term solvency. Long-term solvency ratio. Long-term solvency ratio. And this liquidity ratio, we call another name that we can call liquidity ratio. It is what? It is a short term. It's a short-term solvency. The short-term solvency. The short-term solvency. So that means that we can say or short-term solvency. So this one, long-term solvency, or we can call it what's it called? Stability ratio. Stability ratio. Is either you call it long-term solvency or stability ratio. Number 5, we have investor ratio. Investor ratio, or stock market. You can see stock market ratio. So this is how you classify them. So the what's it called? The beauty of it is that sometimes the examiner will just tell you and say, okay, we'll calculate so ratio. They will mention it. Hello, are we there?
Yes, sir.
Yes, sir.
But in
Yes.
some cases, the examiner, especially FR, the examiner will mention what they want you to do under the ratio. But we cannot predict them. Some examiner can tell you that compute profitability ratio. Then you should be able to know what ratio that is under profitability. Profitability ratio. What ratio is under profitability ratio? But by and large, in some cases, the examiner can just tell you what to do. But we need to know the ratio that is under each heading. Number 1 of the ratio that you can find under the profitability ratio, we can say what's it called? Gross margin. Gross profit. Gross profit margin. Gross profit margin. Number 2, net profit margin. Net profit margin. So it's common. The examiner can say calculate gross profit margin, which we are going to do tonight. But sometimes the examiner will tell you calculate profitability ratio. You know that these are the things that is under it. But in exam, you cannot do all, because where it's about like 6 that is under it. You cannot do all. So once you do like 4 under profitability ratio, because they can say calculate the ratio under the following: profitability ratio, liquidity ratio. You understand? So because of time, you can just pick it under profitability ratio. You just do the relevant ratio, such as gross profit margin, net profit margin. You can also do ROCE, return on capital employed, which is the same thing as which is equal to return. These are the relevant ratio under this: return on capital, return on capital employed, capital employed. So what's it called? Number 4, operating profit margin, operating profit margin, operating profit margin. Number 5, return on assets. Return on total assets. Return on total assets. So you can see that when you just do like a theory, the relevant one, then you are good to go. And the return on equity. Return on equity. So if examiner did not state the ratio that we are going to compute, they are just telling you that compute the profitability ratio. So these are the ratio under profitability. Then let's now do it one after the other. So from this, when we say you should compute gross profit margin, the formula will be gross profit. Are we following, please?
Yes, we're
Yes.
following.
Yes, sir.
Gross profit all over revenue times 100. So meaning your answer will be in percentage. You can get X% as your answer. So your answer will be in percentage. Then when we said what's it called? Net profit margin. So your net profit margin will be net profit, what's it called? After tax. Net profit margin will be what? Profit, net profit, that is profit after tax all over revenue. All over revenue times 100. So whatever you get will be in percentage. You can say, maybe let's use alphabet, Y%, 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 Y%. So the third one is your ROCE, which is what? Return on capital employed. Are we there?
So,
Hello?
We are here. We are here.
Okay. So we said return on what? Capital employed. So when you are computing for ROCE, please hold on for me, please. Just give me 2 minutes. Okay, sorry, I'm back. We said ROCE, which is what? Return on capital employed. So that return on capital employed will be your profit before interest and tax all over capital employed times 100. To get your ROCE, which is return on capital employed, will be profit before interest and tax all over capital employed. And this capital employed that we are talking about, how are we going to calculate that? This capital employed that we are talking about, what is the computation of the capital employed? So it's not depend on the examiner. The examiner can tell you that the capital employed should be computed this way. You have to follow what the examiner is telling you. But if the examiner is not giving you what they want you to do as per capital employed, then capital employed will not be equal to, let me do it somewhere here. This capital employed will not be capital employed will not be equal to. So that's what I'm saying, that if the examiner is not telling you what they want for the calculation of capital employed, then you can calculate the capital employed by say, what's it called? The capital, equity. Are we following? Hello? Equity. Hello?
Hello, sir.
Yes,
Are we
sir.
there? Okay.
Yes, sir.
Okay. Equity plus reserve. Equity plus reserve. Equity plus reserves plus long-term long-term debt. Long-term debt. So this long-term debt, you will definitely see it under your non-current liability. But not that you'll be looking for long-term debt. They can decide to put what's it called? Loan notes, loan stock. All these, they are long-term debt. They can also put the debenture there under your non-current liability. So it is long-term debt. So your capital employed will now be what? Equity plus reserve plus long-term debt. If the examiner didn't tell you what they need for the computation of capital employed, then you can use this one to compute your own capital employed. Then you just take your profit before interest and tax all over capital, all over this equity plus reserve plus long-term debt, then multiply by 100. So you get your ROCE, which is return on capital employed. Are we following?
Yeah.
Are we following, please?
Yes, sir.
Okay.
Yes, sir.
And I also mentioned what's it called? Operating profit margin. So this operating profit margin, it is also PBIT. Look at, so that you won't be confused. Look at the number 2. I say net profit margin. It is profit after tax. That is part. This is profit after tax, PAT, all over revenue. But when we say, if the examiner is now telling you to calculate operative profit margin, that one will be profit before interest and tax all over revenue. All over revenue times 100. So this is your operating profit margin. It's different from net profit margin. Net profit margin, it is the profit after the tax has been deducted, after tax. But operating profit margin, it is profit before interest and tax. You should be able to know how to differentiate that. So return on total assets. Return on, hello, are we there? Hello?
Yes, sir.
Okay. So return on total assets, if we are to calculate, what's it called? What's it called? Rota. We call it return on total assets. That's the rota. Return on what? Total assets. So your return on total assets, it is always your total assets. What's it called? Sorry, it is always your, you want to calculate the return on your total asset. It is always your profit before interest, profit before tax, that is PBIT, not interest. Profit before tax all over average, all over average total assets. Average total assets. Average total assets. So profit before tax, profit after tax, I mean part. It is profit after tax, part. Profit after tax all over total assets. And this your total asset, it is the computation of your asset at the beginning plus your asset at the end. Then you can divide it by 2 to get your average. You know, we are talking of the average. Then average has to be beginning asset plus end asset. Then you divide it by 2 so that you get your average. So finally, return on equity. Hello, are you getting this?
Yes, sir. Please, can you repeat that beginning asset?
Okay. Beginning asset, you know, when they are giving you a financial statement, maybe 2 periods, 2017, 2018, the beginning asset means opening balance. Plus, if it is 2017, 2018, you know, 2017 is the opening, 2018 is the closing. Add the 2 and divide it by 2. That's what I mean by beginning and end.
Okay,
Is it
sir.
clear
Thank
now?
you, sir. Yes, sir.
Okay. So we talk about return on what? Return on the investment. Return on what? I said investment. Return on what? Equity. So this return on equity, it is also our profit after tax. That is part. Profit after tax all over shareholder. The shareholders' equity. The average of the shareholders' what? Equity. Shareholders' equity. Or if we don't see that one, we can say total equity. Total equity. Total equity. We can say parts all over share average of shareholder equity or total equity and the average of the shareholder equity will be shareholder equity at the beginning plus the shareholder equity at the end divided by 2. That's the meaning of the average. average shareholder equity or total equity. Is anybody raise hand that want to ask question? Please go ahead, please. Hello. 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 Are we there?
Hello, sir.
Hello, go ahead. Is anybody want to ask question? Because I
Yes,
see
sir.
some. Okay, go ahead, please.
Okay, sorry, sir. I'm just quickly looking through net profit margin and operating profit margin.
Okay.
I can see that net profit margin we said is net profit.
That the profit after tax.
Okay. I think I've seen it because I saw that this one is before interest and tax. Okay.
Yes. This one is after. The other one is
Oh,
before. Yes.
okay, it's clear, sir.
So this is what profitability ratio is talking about.
Sir,
So
please, excuse me.
if the examiner wants it to be easy for us, the examiner will just tell you that compute gross profit margin, operating profit margin, ROCE. But if the examiner is just telling you that compute profitability ratio, then these are the ratio on that. But in exam, because the examiner will not only mention profitability ratio, the examiner can say compute the ratio under the following: profitability ratio, liquidity ratio. Then there's no time to waste. What you just do is that among this profitability ratio, just look for the one that is simple for you. Just calculate like three or four. But make sure that when you are computing ratio for profitability, always include ROCE, because ROCE, it is very, very what important when you are computing profitability ratio. You can just compute like 3 or 4, then move to liquidity ratio and also compute like 3 there and so on. Because if you say you want to compute all of them because you know it because of time, so that is not how, unless if the examiner states it clearly that compute so ratio. I believe that we are good to go. Hello.
Sir, please,
Yes.
can you help me explain that return on total assets, the beginning and the ending part? I don't know.
Okay. When we say return on total asset, I said return on total asset, the formula, it is what? Part. Profit after tax all over average total asset. And how can you get to average total asset? If they are giving you 2 periods like this, maybe they are giving you something like 2018, 2019, and they are giving you maybe what's it called? You know, when we say total asset, we are talking of the non-current asset and current asset. That's the total asset. So if this one is 2 and this one is 3, if this one is 1 and this one is 2, the total asset for 2018 is 3 now. The total asset for 2019 is 5. Then how can you get your average? And I said beginning. Beginning is 2018. That is a 3 plus end, which is 2019. That the opening balance is 2018. Closing balance is 2019, which is 5. Then you now divide it by 2. So the average will now be 8 divided by 2. So your average is now 4. Is it clear now?
Yes, sir, thank you.
All right, you're welcome. So, liquidity ratio. So if the examiner is telling you to what's it called? Compute what's it called? Liquidity ratio. Are you following, please? You have to follow. Hello.
We are following, sir.
So if the examiner is telling you to compute what's it called? The
Liquid.
liquidity ratio, and based on the explanation that we give, that it's possible for them to mention the ratio one after the other, or probably they will just what's it called? They will just talk of the ratio directly. Hello.
We are here, sir.
And I said that liquidity ratio, it is a what's it called? The short term, right? Short term solvency. Hello, my people.
We did,
Hello.
sir.
I
We are
said
here, sir.
liquidity ratio, it is a word, short term, what's it called? Short term solvency,
Solvency.
right? And when you are computing for a short term solvency, it means that you have to be computing it one after the other. When they said short term, so and when they said compute liquidity ratio, if they are not mentioning it for you. But suppose they mention it, you don't have issue, just calculate whatever they mention under that ratio. But you must know what are the ratio that falls under liquidity. Do you get my point? So number one ratio that fall under liquidity ratio, we call it what? Current ratio. Current ratio. Current ratio. And this current ratio, the formula, it is always the current asset all over current liabilities.
Sir, please can you come again? It seems there was a breach in the network.
Okay, I said liquidity ratio, the ratio that fall under liquidity or short-term solvency ratio, it is what? Current ratio. So you know, in some cases the examiner will just tell you that calculate current ratio. You know that. So let me calculate current ratio. But if the examiner now say calculate the following ratio, liquidity ratio, you should be able to know what ratio that fall under liquidity ratio. That's what we are explaining. So liquidity ratio is number one ratio. Current ratio is one of the ratio that fall under liquidity ratio, which is current asset over current liability. Then the benchmark, it is into ratio 1. So whatever you get under your ratio, you can bench it toward into ratio 1. Number 2, it is called quick ratio or ACCA test. Quick, if they mention quick ratio fall under liquidity ratio, or we call it ACCA test. ACCA test ratio. So this ACCA test ratio or quick ratio is the same ratio of this current ratio, just that you are not going to take inventory into consideration. It's the same thing as current assets. Current assets minus inventory. You get my point? You are not going to take the inventory into consideration. And the inventory we are talking about here, it is closing inventory minus inventory that is closing. It is closing inventory we are talking about here. Minus what? Closing inventory. Minus closing inventory all over current liability. Current liability. You can see that it's the same ratio. It's the same computation, just that the acid test will not be what? Inclusive of the acid test is what? Exclusive of inventory, which is the closing inventory. Then you base this one also into ratio 1 as the benchmark. So whatever you get, you set into ratio 1. Are we there? Hello?
Yes,
Are we
we're
following?
there. We are there.
Okay. So another thing that we can also think of, we call it cash ratio. Cash ratio is also one of the word liquidity ratio. So the cash ratio is usually, we say cash and cash equivalent, cash and cash equivalent. Cash and cash equivalent. Cash and cash equivalent all over the current liability. All over current liabilities. So whatever you get, you bench it toward ratio 1 as a benchmark to it. Are we following, please?
Yes, sir.
Yes, sir.
Hello?
Hello, sir.
Okay. So this is what you are putting under your what? Your liquidity ratio. Maybe when it is 11, we can stop the class and we can rush to look into what we have discussed so far. Are you with me? What we have discussed so far.
Yes, sir.
We can try and what's it called? We can try and look at little things that we've discussed so far. Then when next we meet, we talk about the other ratios, like how many that is still there. We talk about efficiency
3.
ratio. Okay, we talk about the efficiency ratio or activity ratio.
Activity ratio.
So this efficiency ratio are those ratio that you normally see, like what's it called? Trade receivable, payable days, receivable days. Do you get my point? All those things
Yes,
that you
sir.
normally see, yes. Inventory turnover. Do you get my point?
Yes, sir.
So those are the what's it called? They are the efficiency ratio. Efficiency ratio. Just that for this class, I don't think that they can tell you that calculate the following ratio. Calculate the following ratios like profitability ratio, liquidity ratio, efficiency ratio. But though that's why we need to learn it anyway, because no one can tell if you are expecting that they will mention what you have to calculate, and maybe eventually they now say calculate liquidity ratio. You should be able to know what will fall under the ratio. So let's look at some practical example and see what we can deduce from it. Then if we now cover the remaining ratio, because I think we don't have enough time again because of some of us are going to work tomorrow. So let's look at what's it called, like profitability ratio and liquidity ratio. So let's look at some questions under that. I think I shared question with us, right?
Sir.
These are the questions that I shared. I shared question on the work back. That's what I said. We are still going to look at the work back. Work back means the examiner can prepare the ratio down, and they will now tell you to prepare. So you can look, you can see now all this. Can you see my screen? Hello. Can you see
Yes,
my
sir.
screen? So you can
Yes,
see
sir.
that all this ratio is prepared already. Gross profit margin. But from there, the now said prepare the statement of profit or loss and statement of financial position. Look at this question now. They want you to use it to prepare statement of profit or loss and statement of financial position. And being looking for you to calculate this is easy anyway. But if you want to do it, you must ensure that you know your formula very well, because it's from that formula that you start doing the work back. Then, so let us leave the work back first. Do you get my point? So let us leave the work back first. Let's go and look for another one. So when we treat those one and we are good to go, then we can now think of how to do the work back. This is also work back. They say redraft the financial statement. You can see from these ratios now, all this information, they want you to use it to draft a financial statement. So this is also work back. So let's leave the work back. Are you following, please?
Yes, sir.
Okay. Let's leave the work back. So we are still going to it. Look at this one now. So let's look at the requirements. What they ask, you can see that the examiner don't want us to stress. You can see compute the following ratio: profit margin, return on capital employed, inventory turnover, current ratio, quick ratio. So among all this one now, which one have we discussed? We've discussed profit margin, right? We've discussed return on capital employed. We've discussed current ratio, and we also discussed quick ratio.
Quick ratio.
Is it clear?
Yes, sir.
Okay. So because we've not discussed about the inventory turnover and debt to equity ratio, so then we can say we cannot do this one tonight. So when we fully discuss all the ratios, then we can able to finish whatever ratio that that is what that is open to us here. So let's see another question. Let me see this one. So I want to check all the questions. Let's look at this one too. I send a lot of questions. So if you go through it, obviously let's look at the requirement of this one too. So look at the requirement. Compute the relevant financial ratio. Can you see now? Can you see what they mention here?
Yes, sir.
Compute the relevant financial ratio. You can see that they didn't mention whether gross profit ratio is relevant financial ratio. So you now begin to calculate the relevant financial ratio. Hello.
Hi.
Hello.
Hi.
Hope you understand the logic. And in my explanation, what did I mention to you that is relevant when it's come to financial ratio? What are those things? Under the profitability ratio, I say you cannot do all, right?
Yes, sir.
But if I say you cannot do all, what is the major one that you need to do? I say you must not neglect ROCE, return on capital employed.
Return on capital employed.
Yes, you have to do gross profit margin. You have to do net profit margin. You get the point? Then the under liquidity, you just look at what are you expecting to do under liquidity as well. So all these ratios that I'm trying to explain that time, liquidity, efficiency, and all that, these are the relevant financial ratio. Just that you have to be picking not everything, maybe three two or two or three ish. Is it clear?
Yes, sir.
Yes, sir.
Okay, let me look at the another one that is here. I just want to see whether I've explained. Okay, let's look at the requirement too. Look at the requirement. Hello, that person should move, please. That person should move. Look at the requirement here. Calculate the ratio for the Prince PLC equivalent to the provided industrial average ratio. If you remember, I explained this industrial average that time. That when we are talking of the limitation of the financial ratio, I mention I, which is what? Isolation. That a ratio will be good and have what? Financial have what? Impact, meaningful impact if you are doing a comparison between one ratio. So this is what they call industrial average. All this you can see set average ratio. These are the industrial average they've already computed. Maybe the industry that you are currently when you are where the industry that you are currently, I think they said microchip design. Then they now say you should calculate the ratio based on this. So whatever they have here is exactly what you are going to calculate. You have to compute your own return on capital employed. You know they got 18 years as industrial average. Then you have to compute your own. So when you now compute your own, you calculate your net asset turnover, you do your own gross profit, and so on like that. All the ratio that is there, you have to do your own. That's what they mean by calculated the ratio for the Prince PLC equivalent to the provided industrial average ratio. You have to do your own. Then when you now do your own, you now move to B to write a report. Write a report analyzing the financial performance and position of what? Prince PLC based on comparison with sector average. Is it clear?
Yes, sir.
Okay, good. Let's look at. Is anybody want to ask question? Hello? Any question?
Go ahead, sir.
Okay. Another thing here is this. Let's look at requirement here too. See now, the requirement that we have here, the examiner is already stating it. Calculate the following ratio for both companies. How many companies is there? 2 companies. You can see IFI Limited and Glow Limited. That's the 2 companies. So as you are computing for IFI, you'll be computing for Glow. You have to compute return on capital employed. And I said, sometime if you want to calculate your capital employed, the examiner will tell you what he or she need. You can see capital employed taken as what? Long-term interest bearing borrowing. Can you see? Hello?
Yes, sir.
You can see that the examiner has already mentioned what he wants you to use as capital employed. Capital employed taken as long-term interest bearing borrowing. Is it clear?
Yes, sir.
Okay. Then, as a result of that, you get it. Plus, you can see, say borrowing plus what? Owner's fund. That's what they want you to use to calculate your capital employed. Long-term borrowing plus what? Owner's fund. Long-term borrowing plus what? Owner's fund. That's what examiner wants you to use to calculate your what? Your capital employed. Then the formula will now be what? Profit before interest and tax all over long-term borrowing plus owner's fund, then multiply by 100. Then they want you to also calculate net asset turnover, pre-tax return on equipment, gross profit margin, profit before interest and tax margin, current ratio, and so on like that. Then you now assess the what? Relative performance of the two companies. So that is, you have to assess them, which one is doing better among the two of them. It's based on the ratio that you computed. It's based on the ratio that you compute for two of them. Then you now use it to do what? To analyze their performance. Are we good to go?
Yes, sir.
Okay. So the first one, do you want me to give you as an assignment, or what do you think? That first one that I opened, can you try that?
Yes, sir.
The one that is that I said is not that you can just like this one question Mirage PLC, calculate profit margin, calculate what's it called, return on capital employed, calculate current ratio, and calculate quick ratio. Then when you are done, send it to me. Send it to me. Send it to me. So then I will check it. So in our next class, we are going to discuss the remaining ratio. Are we good to go?
Yes, sir.
Okay.
Yes, sir.
Okay, good. I say calculate what? Profit margin. So if I say you calculate profit margin, what that one means? When you say profit margin, what does that mean? Hello. So if I say calculate profit margin, what does that mean? So you have to calculate gross profit margin.
Okay.
Do you understand? For the two periods, you have to calculate 2007 and 2008. You know, when they say profit margin, they didn't state it. You understand? They just say profit margin. So then you have to calculate gross profit margin. That's what we are trying to explain there. You get my point? You calculate your gross profit margin and also calculate your what's the second one?
Net profit margin.
Yes, profit margin. Yes. Is anybody want to ask question? I discovered that something dropped.
Yes, I just wanted to ask about this net profit margin you mentioned.
Okay. So we are good to go. So in our next class, use that one as an assignment. If you follow what I explained here, you don't have issue with the question. Just solve it. Do for the two period, 2007 and 2008. You do it. And when you are doing it in exam, this is how you tabulate it. Let me show you so that your work will need. You put the what's it called? The name of the company, Mirage PLC. Then you do what is called ratio. You say ratio. So the ratio that you want to compute, let's say gross profit. Is it clear? You say formula. You put the formula that you want to use, which is what? Gross profit all over revenue times 100. This is the formula. Then the two period, 2018. I said 2018, 2008, which is the current period. Then 2007, which is the previous period. Then you solve it here. This is the working. So you just say gross profit of this. What do you have as gross profit? Something all over something times 100. Then you get the answer here. Then this one also something over something times 100. You get, this is how you do your what's it called? Your interpretation of the ratio. This is how you tabulate it. Is it clear?
Yes, sir.
Okay. So thank you for your time, and see you next class when we are going to continue from where we stop, so that I should be able to do the remaining one. Then we are now going to look at how we are going to write a report towards our ratio. Are you going to write a report towards the ratio that will compute